Good morning to everyone. We're starting this webinar this morning together with the Institut Jacques Delors and Center for Economic Strategy in Ukraine. And today we will debate a very sensitive and very hot issue concerning the seizure or confiscation of the Russian assets in Europe to help Ukrainian to defend Ukraine. As you know, tomorrow the European Council will start for 2 days, and this will be one of the issues that will be debated. Since few months, European Union already is using the interests of the Russian frozen assets in Europe to help Ukraine. This is something about 4 billion euros per year, helping both Ukrainian defense and also Ukrainian, so to stabilize Ukrainian economy. But there are some. There have been lots of debates about the legal aspect, the political, financial, and moral aspect of this issue. And today we have the best people to debate about this. I will present them one by one. I will start with Yana Ohrimenko. She's a researcher, PhD. She has been working on these issues for many years. She is lecturer and researcher in Warsaw University, in Lazarski University in Warsaw, and also in Center of Economic Strategy in Kyiv. And she is the author of an extensive work on this issue, and she will be the first to present her work. Then Paola Subacchi, she's an international economist, professor of political economy in Bologna University, Italy, and she's incoming chair in sovereign debt and finance at Sciences Po Paris. She's member of board of different international think tanks like Istituto Affari Internazionali in Rome. She was working at the Chatham House in London, and she for many years was co-founder of Global Policy Institute in Queen Mary University, also in the UK, in London. And last but not least, we will have Mykola Yurlov. He's a lawyer from Ukraine. He has been working as legal counsel in Geneva Call. It's an international NGO. She's a specialist of international crime investigation and of violations of international humanitarian law. And currently he's working in the Department of International Law in the Ministry of Foreign Affairs of Ukraine. So we will start with Yana. Yana, you will have 12, 13 minutes to present your work. Then I will pass the floor to Paola Subacchi. She will discuss, and then at the end, Mykola Yurlov. And we will have 20 to 25 minutes for the questions. You can write your questions, and I will present them to the speakers. Please, Yana.
Thank you so much. So please give me a second. I will try to share my screen. Okay, so please confirm if everything is fine.
Yes, we can see it.
Okay, cool, thanks. So I will do my best to use my 13 minutes effectively. So long story short, most of Russian frozen assets are located in the European Union, 72%, with 62% in Belgium, Euroclear, although no one can be certain about the precise amount of Russian assets frozen worldwide. So this is kind of a sensitive issue, and there is open sources provide different estimations, but nevertheless, so we have to admit that in this process of using Russian assets for supporting Ukrainian defense and resilience, European Union will play the flagman's role. So that's why we are concentrating on European bonds in this research. So Ukraine's funding needs are huge. Despite the generous support from the European Union and other international partners, there is still a substantial funding gap. And the needs for defense financing are rising. So right now there is like a hot discussion in Ukraine. Like it's absolutely clear that it's absolutely crucial, but there is no consensus regarding how to finance this. So, considering all these factors, the debate is slowly moving beyond using windfall revenues, like so-called ERA, to finance Ukraine to more decisive steps, such as a reparations loan, like a new instrument which is supposed to use Russian assets to finance Ukraine. Even though it was designed as alternative to confiscation, some EU officials, policymakers still warn that it could trigger market turbulence and impose some financial stability risks and also debt sustainability risks. So this was the main motivation for this research, because there are surprisingly few solid, like methodologically solid studies which would explore possible consequences of like Russian assets, let's say confiscation, even though we're not discussing confiscation right now. And somehow we just wished to fill this gap. So the puzzle we attempted to solve is just one element of this very complex problem. Basically, we concentrated on the perception of financial and retaliation risks from the perspective of common investors. I mean, like non-speculative, non-institutional investors, like people who basically purchase EU sovereign bonds. And yeah, like common concerns, for instance, in Bruegel publication or Chatham House publications, that Russian assets confiscation, or in this case, we're talking about some kind of alternative quasi-confiscation, let's put it this way, although it's not very accurate, would threaten financial market stability in the European Union. So the logic goes like this. There are higher perceived legal and retaliation risks, so investors demand higher risk premia, and there are higher borrowing costs and generally higher costs of financing for all the like business entities in those countries, because we know that in financial models we typically treat bond yields as some like risk-free interest rate in the economy, like baseline level of risk. So we can see that indeed, here we use like bond yields as an illustration. Yields have been rising since 2022. However, like there are many factors, like there were attempts to fight Putin's inflation. There is, in general, higher level of uncertainty during to the full-scale war on the continent. So the question was, can we really blame EU policy regarding Russian assets for spikes in bond yields? And we decided to go for event study, which is a relatively simple and reliable instrument to figure this out. And our key area of interest is how EU sovereign bond yields reacted to the news about Russian assets, immobilization, and usage. So I would like to highlight that here we just explore one element of this problem, because there are still some arguments about possible speculative attacks and so on. So here we just discuss perception of like legal and retaliation financial risks from the perspective of common investors. So not to overwhelm you with the methodology, just very quick description of what we have done. So baseline method was event study, which is used to assess cumulative yield changes around events, and we went for constant mean model, at least in short-run analysis. For data, we collected a sample of 2, 10, and 30-year EU sovereign bonds, which were, of course, analyzed in subsamples separately. And for events, we went for EU milestones on Russian assets, from the first one till the middle of August. So we classified them into immobilization or freezing and usage events. The latter included windfall revenues usage and even some talks, public debates about possible confiscation. And dates were validated by matching official announcements in press, in media, to Google Trend spikes. For time horizons, we went for short-run analysis, like 10, 4, and 2 days windows, trading days windows. And for medium run, we extended up to 2 months or 60 trading days after the event. For statistical inference, we went for bootstrapping. For short run, it was two-way nested bootstrap, which helped us to account for countries' heterogeneity, but at the same time helped to make sure that interpretation is relatively simple and intuitive, so we can tell precisely what actually happened. And for medium run, we went for two-way Dirichlet Bayesian bootstrap, to account for countries' heterogeneity, but draw stable trajectories for medium run analysis, because this was more essential. We went for checking the persistence of the shock and total cumulative effect in medium run. For robustness check, we use placebo test, which is very common for event studies, when you basically draw a sample of random events and you check whether cumulative changes are different from cumulative changes around the dates in event sample. And our analysis passed the placebo test. And for medium run, we use principal component analysis to extract the common EU component, which is a typical thing, since many things might affect yield changes in medium run, and we just went for this for the sake of robustness check. So our key findings can be summarized as follows. So news on asset immobilization caused no noticeable consistent effects on the markets. And usage news caused some effect, but it was relatively modest and it was temporary, and it was mostly for 10-year bonds. 2-year bonds moved modestly and settled relatively quickly within several days after the announcement, and 30-year bond yields showed no credible reaction. And there are many explanations for this, but one of them is that they are mostly popular among institutional investors, like pension funds and so on. So that's why, like, news announcements were not that important in this case. So 10-year bonds were affected the most. And even if we talk about like the maximum changes, it reached its peak on day 4, but it was relatively modest. It was like 16 basic points plus minus 6 basic points with 95 confidence intervals. And when we talk about medium run, shocks actually faded. Like after 2 weeks, 10-year bonds yields showed no credible rise. And by then, the total cumulative change was about 8 basic points plus minus 7 basic points with 95 confidence intervals. If you wonder whether this is a lot or not that much, we actually performed some extensive meta study on rises in European sovereign bond yields in the past, like based on in response to different events. So this is something relatively routine, comparable with routine bad news or one-notch credit rating decrease. So well below crisis episodes in Europe. And when we excluded common EU factor for the medium run analysis, the results were actually negligible, which means that when you talk about idiosyncratic shocks, or like, let's say, individual countries shocks, they were not that substantial. So this means that all these financial, legal, and retaliation risks around using Russian assets are perceived as common European Union issue rather than a problem of individual countries. And we specifically checked this for countries where Russian assets are located, and so this concern is a bit overestimated from our perspective. Like here we're talking about Belgium, who keeps the most of Russian assets in Europe, France, and Germany. So what it means for us, risks of confiscation are present, but they are relatively modest, and they are often overestimated compared to the way they are presented in media. So we can keep in mind that shocks are temporary and relatively modest, which means that persistence should be prioritized over noise. Like even if we see some spikes, we keep in mind that they are temporary. And what we need is steady and transparent communication. And we believe that policymakers should resist the urge to react to short-lived market moves. Debt can be managed, so we just need to concentrate on 10-year and 2-year bonds and avoid issuance around major usage announcements and pre-block calmer windows for big 10-year and 2-year bond supply. Banks can also contribute by reinforcing the separation between like EU policy for Russian assets and monetary policy. So just to anchor the expectations and remind that market functioning tools exist if needed. And Ukraine government can definitely use clear strategy when it comes to communication on the usage and governance of those funds, since they can decrease perceived legal and retaliation risk premium. This includes pre-announcing credible pipeline of projects and timelines and coordinate this timing with EU and G7 communications. So I believed I managed to present the basics within the time limit. Thank you so much, and you are more than welcome to send your comments and suggestions to my email.
Thank you very much, Jana, for your work and for your presentation within the time limits. And now I invite Paola Subacchi to comment the study presented by Jana, and also to discuss more broadly about the what is at stake with this issue. Thank you very much.
Thank you. Good morning to everyone, and really good paper, Jana, and a very, very interesting reading. So my comments are around the objectives of this paper, what we try to solve, right? And you talk rightly about the short-term, the funding needs for Ukraine. And so there is a short-term funding needs, which actually is reflected in the projection for the 2026 budget, which has a quite large deficit, but also the long-term financing needs. So the two need to stay together. And again, estimating how much the funding gap, estimating the funding gap is really difficult, and is really difficult due to a number of contingent events that are developing as we speak. So it is very important to understand where this money will come from. And your paper addressed the issue of the immobilization of the Russian assets in a clever way, and again, methodologically is very interesting. And basically, the question you try to answer is, what would be the reaction of international investors or general investors about the fact that Russians or anyone's assets can be immobilized and be frozen inside the European Union? And that could be the question you're trying to address is the perception by investors of the riskiness of EU or generally sovereign debt issues by EU countries, and also the euro. So if there is a risk of being this asset to be immobilized, would that put a premium on the investors, or they put a premium on these assets because the investor will ask a premium to compensate them for the risk of having this asset in the European Union holding. So the thing is, and this is the question you try to answer, and it's actually done very well. And you show then effectively there hasn't been much of an impact on the bond yield. This somehow was expected in some as well, but it's good to have the data that shows this the impact on the reaction, say, of the investors. But also I would say, I would suggest then you to sort of widen and broaden your approach to include the safe asset by definition and run a similar study by using the treasuries, the US treasuries, as the case to show how the various sanctions that have been applied over the years, and in particular there be an escalation of sanctions, the weaponization of the dollar since 2018, again, the impact of that on investors' demand for US Treasury, which are the safe asset by definition. That would be a good way to compare because, again, in particular, recent studies have shown that the impact has been very limited, especially after the election of last year. So that means, and again, comparing the action of the US administration and the weaponization of the dollar with the immobilization, in this case of the Russian asset, would be very interesting to really understand how much sanctions and any type of geopolitical action will affect investors' appetite and demand for safe assets. So that will be urged because it will be an interesting comparison. It's also interesting that in your study, your study shows that most impact is on 10 years bond, because obviously there is a longer term and obviously the risk is to some extent more pronounced. But they're also interesting. I would urge you to also consider another aspect, which is really tied with the current proposal, which is like to issue a 140 billion, 140 billion euros loan to Ukraine based on the Russian assets that have matured into cash and they stay at the Euroclear. So that is an interesting example because what is the proposal include a basically national guarantee from participating EU countries into this proposal, which is under discussion or will be under discussion. So there is a national element, there is a national guarantees. In the event, then, Russia will not pay reparations. So basically it's the use of these frozen assets to issue a loan of 140 billion euros loan to Ukraine, on the understanding that at the end of the conflict, there will be reparations that will be paid by Russia. But in the event that this reparation will not be paid, then the governments, EU countries that are part of this agreement scheme actually will guarantee this loan. And so there are national guarantees there. So what will be interesting here, and again, I think logically and with very simple calculation, again, we can say then the impact will be probably limited, but that's what is the concern at the moment, is about what will be the impact of these national guarantees and the fact that, then the EU countries might end up with this debt. What will be the impact on markets and on investors, let's say, preference and demand for EU-denominated assets? So that would be an interesting question to answer, which will somehow inform the current debate. And again, we can be pretty sure that because the impact is limited, and in fact, more or less, we're talking about a loan which would be about less than 1% of the Eurozone GDP. And again, there are ways to sort of create a safety net around this. But that is the current concern, and I think it would be very interesting to address that concern related to this, the current proposal. The bottom line is, this is something that needs to be done. And so it's a question of how can be done, and in a way then, to some extent, address the concerns of EU member states that create a sort of protect financial stability, even if financial stability it's definitely not at stake, but it's a way to give comfort to the EU member states, then this type of actions to really raise funding for helping Ukraine is actually doesn't create problems with or create tensions in the member state, and particularly vis-a-vis the public opinion. But I think the key question is, the key issue is how we raise this money, and that is fundamental for everybody, for Ukraine, for the EU as well. And I think I stop here. Thank you very much.
Thank you very much for your very interesting comments, and also the questions you raised. I also I can ask now the participant to start writing questions in order to have time for me to read them, and then to bring them to the speakers. And now I turn to Mykola Yurlov, and maybe we'll ask him to be to present more legal aspects of the issue, and maybe also international and political ones. Please, Mykola, you have 5 minutes.
Am I audible, visible?
Yes.
Yes. Good morning, everyone. Many thanks, Tornike, for the introduction, and to Jana and Paola for the excellent economic analysis. It is indeed very important to have a full picture of the way that the economic side of this debate is played out. At the same time, while I will be asked, while I have been asked to address the legal issues, I will first start with giving a more broader picture about how the whole concept of the use of Russian immobilized assets has evolved over time. The initial decision of many states, including the European Union as a regional integration organization, to immobilize the central bank of Russia assets has been a very important one in the response to the illegal Russian war of genocidal aggression against Ukraine. At the same time, it is important to see the historic context before that, and the way that the foreign policy decision-making has impacted all sides in this, all sides in this issue. Russian war against Ukraine has begun not in 2022. It started in 2014 with the invasion of Crimea and Sevastopol. And for the past 11 years, there has been a state of international armed conflict between Russia and Ukraine, which has started in February 2014. At the same time, it was not the first time that the Russian Federation has violated a jus cogens, which means a strong law from which no derogation is ever permitted, prohibition on the use of force. The first time in the recent history that the Russian Federation has committed aggressive actions and wars of aggression was in Georgia in 2008. But again, that was not the first time that they have tried to undermine the territorial integrity and sovereignty of the neighbor states. The first time they actually did it was after 1991, after the Russian Federation emerged on the ruins of the Union of Soviet Socialistic Republics, was in 1992, with the occupation of Moldova and the support of the so-called Transnistria. Then in 1995, the Russian Federation has tried to annex Crimea by staging a secessionist movement led by so-called self-proclaimed president of Crimea, Yuri Meshkov. And in exchange for withdrawing their attempts to annex Crimea in 1995, they demanded that Ukraine give up 83% of the Black Sea Fleet, which was supposed to be all of it was supposed to be Ukrainian. Ukraine has signed an international agreement called, actually 3 agreements called the Black Sea Fleet Treaties and the Friendship Treaty in 1997, in which Russian Federation has explicitly recognized the borders of Ukraine. We have agreed to cede the vast majority of the Black Sea Fleet to Russia, and we have agreed that the Black Sea Fleet will be based in Ukraine, in Sevastopol and Crimea. Of course, as you are very well aware, these agreements were violated in 2014, but even before that, in 2004, during the Orange Revolution, when the pro-Russian presidential candidate Viktor Yanukovych was ousted for trying to manipulate the elections, Russians have launched yet another attempt to bite off a significant portion of Ukraine during the 2004 separatist meeting in Severodonetsk, where they gathered local deputies, they brought in the Moscow mayor, Yuri Lushkov, and tried to announce the Novorossiya, consisting of southern eastern regions of Ukraine. All of these actions were met with little to no response from the international community. And that emboldened Russia to proceed further. And in addition to committing vast crimes against humanity in Ichkeria, in addition to invading and occupying Georgia, in addition to committing crimes against humanity in Syria, such as the razing of Aleppo, among many others, by 2022, Russian Federation was pretty sure of its impunity. And that, in their foreign policy calculus, gave them the confidence to try to destroy Ukraine as a sovereign nation, and then to commit genocide of Ukrainians and try to erase ours from existence as a people, as a nation, to destroy our language, our history, our culture, and the very existence of Ukrainians. This is very important to understand because this is not limited to Ukraine. Recent act of aggression of the Russian Federation against Poland, and recent attempts to violate the airspace of the European countries must serve as a wake-up call and to understand so that the decision makers in Europe and across the Atlantic understand that if Russia is not stopped in Ukraine, it's only a matter of time before they try to invade another country. And the support that we receive, for which we are, of course, very much grateful, and it is very much appreciated, is not a charity, which is given to the people of Ukraine solely out of compassion. It is a security investment, and it is the question of the long-term defense and security policy, not only in Europe, but for the whole world. The precedent that Russia has set by invading and annexing Ukrainian territories is of extreme danger to any country in the world which still believes in international law as something that is supposed to protect it. And this is why the immobilization of Russian assets and any further actions to them, including confiscation, which we're not discussing at the moment, but has been discussed in the past, is absolutely in conformity with international law based on the concept of countermeasures. This is a well-recognized rule of international law approved by the International Court of Justice, which allows states, not only the injured state directly, such as the state of Ukraine, or the other states which have suffered from the Russian aggression and were forced to spend their money, accept Ukrainian refugees, invest in their defensive capabilities, but any other state in the world has the right to apply countermeasures against Russia, because the obligation not to use force against other states, the obligation not to violate territorial integrity, the obligation not to annex the territories of other states is an obligation erga omnes, which means owed to the whole international community. And that allows all those other states in the world to use countermeasures. Countermeasures are actions which would normally would be in violation of international law, but given the extreme nature of Russian systematic campaign to destroy international law as such, are justified as long as they're temporary, reversible, and proportionate to the violation. In our case, the temporary nature of the temporary and reversible nature of even the confiscation, let alone reparation loan, is achieved through a very simple scheme. The Russian Federation owes to Ukraine, has caused to Ukraine more than $1 trillion in damages for its war starting in 2014. The calculations for the past 3 years of the full-scale aggression have been conducted by the World Bank, the EU, United Nations, and the government of Ukraine, and there are around 589 billion of losses just for 3 years. And for the full 11 years, they're well north of 1 trillion. Therefore, any assets confiscated, transferred, or directed in any legal form to Ukraine are a part of this payment of the duty of Russia to compensate for damage. Now, this obligation of Russia to pay damage is not only rooted in international law, it has also been confirmed by the United Nations General Assembly's furtherance of remedy resolution passed in November 2022, when 94 states have agreed to recognize that Russia must compensate for all damage, loss, and injury caused on the territory of Ukraine as a result of the full-scale aggression. Now, what that means for the purpose of the reparation loan is that legally, there are no obstacles from the point of view of international law. And this is not just my opinion, though I have been practicing in public international law for the past 15 years. It's the opinion of the world's most highly qualified publicists in international law, which they have published back in 2023, including well-recognized scholars from Belgium, France, Germany, US, UK, and many other states. Now, what that means from the point of view of legality is that there are no legal impediments to do this. What that means from the point of view of legal risks, which have been discussed, is that even if we, for the sake of the argument, presume that there is some kind of court that Russia could go to appeal the decision to immobilize or transfer the assets, there is bulletproof legal defense that allows any court of law or arbitration to prove that that measure was in conformity with international law. But the issue is that there is no such court of law. Russia cannot go to the International Court of Justice. It does not have jurisdiction to hear this case. Russia cannot go to the national courts because they are not, once again, they do not have jurisdiction. And Russia cannot go to the bilateral investment treaty arbitration tribunals because the Russian central bank does not qualify as an investor under these treaties. This is very important to understand. Now, the economic risks argument has been covered very well. Though I'm not an economist, there's just one question that I wanted to ask when conducting the analysis of the risks of Russian failure to pay for compensation, and that is, what are the alternative scenarios that are being considered? The Russian war against Ukraine will not somehow magically disappear. There is a very clear understanding, at least in the eastern flank of NATO and Europe, and clearly in Ukraine, that it's only a matter of time before Russia proceeds if it's not defeated. And the escalation management approach, unfortunately, has allowed Russia not only to rebuild its army, which Ukrainians have defeated, the first invasion army, but also to adapt to Western weapon systems and the cutting-edge defense techniques that Ukraine is employing. So the alternative scenario against which you, dear colleagues, should be evaluating is not what will happen if Russia fails to pay. But what will happen to the stability of European currency if Ukraine fails and Russia continues its genocidal conquests against other states? And what would be the economic consequences of that? On this, I will conclude my remarks, and I'm happy to answer any questions, including about the compensation mechanism, the register of damage, and the claims commission, on which we're working in subsequent interventions. Thank you.
Thank you very much, Mykola. So you, Yana, you noted the questions that were already addressed to you. I'm reading the questions asked by the participants, and one of the questions is exactly what Mykola asked at the end. So what would be the if the war is going badly for Ukraine, can we compare this? What would be the consequence for the investors to with the consequences of the eventual confiscation of Russian assets? It's one of the questions. There are also three other questions. One is about if you tried economically speaking, saying if not legally, saying assets will be frozen until reparations are paid is equivalent to confiscation. So what about an event study around news of the commitments to keep assets frozen, such as G7 and European Council conclusions, ERA, so the Extraordinary Reset Acceleration, and reparation loans, etc. And there is a last question that I will ask maybe at the end, because you have already several questions to answer. So please, we still have 15 minutes plus 1 or 2 minutes to address these questions. Please, maybe Yana to start.
Okay. So I'd like to thank Martin for questions. My answer will be not that extensive. So here, concerning the nature of this method, we are binded by the sample of available news. We had to check many communiques, publications in press and media, and I cannot recall any strong statements that we intend to keep Russian assets frozen forever, or at least till Ukraine's victory, or at least till Russia compensates all the damage. So I'm not sure whether we can check this. And concerning the suggestion to check how investors react to news from the military field, regarding how Ukraine's doing, and as a result, regarding the risks of full-scale war in other European countries. Interesting, because we discussed this with colleagues at SES as some idea for future research. So unfortunately, I have not done this yet, but we definitely, not definitely, but most probably it might be a good strategy to go with this topic further.
Paola or Mykola, do you want to add something?
Indeed, I can add that, if I may, sorry, Paola, you could go first, sorry. Okay. So I just wanted to ask to add that there have been statements of G7 starting from 2023 that have been particularly claiming that the Russian assets shall remain immobilized until Russia agrees to pay. And this has been a recurring statement, phrase in the G7 statement since 2023. So in our view, given the overall understanding that the current political regime in Russia is, to put it mildly, is unlikely to voluntarily pay for the damage it has caused. That means practically that the assets are to remain frozen, immobilized indefinitely, which would have the same practical effect as the confiscation, in our opinion.
Thank you. Please.
Let me ask actually they look at this issue, first of all, with a broad perspective. So the concern about financial stability that could, or financial instability that could arise from the dealing with the Russian assets, the frozen Russian assets, it's a non-event in financial terms. There is not, and if you look at the numbers, if you look at the type of assets, if you look at the type of proposal, I don't think there is no concern in terms of financial stability and in terms of also the feasibility of the euro as an international currency. Of course, markets are to some extent unpredictable because in particularly now they are very sort of nervous. I can say the fact that gold has become such an important asset reflects the fact that people are nervous about geopolitical tensions, geopolitical risks. That include also the conflict in Ukraine and everything then Mykola talked about. But I think the financial stability risk and concerns actually covers a political concerns, and that is the big issue that we have in the EU. And I totally agree with Mykola and with Jana. This is an issue that needs to be addressed by the EU and need to be addressed in an open, clear way, and not try to cover the problem with financial stability risks. So it's a political decision. The numbers remain small, but they are very important for Ukraine, and it is very, very important that we find a way to mobilize the resources that are needed in this phase to go over the short term and also understand. And there is a long-term scenarios which is totally unclear. And again, I'm looking at Jana and Mykola on my screen to see there is the issue about reconstruction. There is a risk. There are issue about giving Ukraine post-conflict enough funding to really go back on their feet. And so this is really, really important. Now, the issue about the frozen assets, again, I was listening to Mykola with great interest. They're there. I totally agree. And there is no guarantee that even that if the international law says to Russia, then we need to repay these pay reparation, war reparation. There is no guarantee that we'll do it. And, again, we don't have a particularly strong track record in terms of compliance with international law. And so obviously there is a risk here, and particularly if you look at the proposal that is currently on the table of issuing this loan that is actually backed by these reparations. So there might not be any reparation. This is something we need to be aware of. But again, the numbers are such then first of all, they do not undermine the financial stability of Europe. There is no risk for the national debt, sovereign debt of EU member states. There are issues and instruments that can be used, perhaps again issuance and EU-based guarantee, the EU budget, EU balance sheet as a way to back this loan. So there are many technical solutions there, but I go back to the issue is political, and then we need to find a way to provide, let's call it, enough comfort to go over this hump and finally release the funding for Ukraine. I'm not sure, Tony, if I answered the question, but I think this really picked some of the points that were discussed.
No, it's extremely interesting. We have still the time for the last round of questions. There is a question about what mechanism would make it possible for the EU nations to carry the risk collectively without jeopardizing the immobilized assets. This is the one question. Another question is more about EU decision-making process and the mechanism. And the participant is asking, what do you think about the unanimity issue related to the decision-making process? And is it possible to circumvent unanimity and use qualified majority? And maybe the last question, which is not directly linked to the Russian assets and their use, it's more about the export of Russian crude oil and oil products to the countries like PRC, India, and Turkey, and what can the EU leverage to incentivize these countries to use alternative sources of energy and cut the most important sector for Putin's war economy. Maybe it's the question to Mykola, the last one, but please, you have let's say 3 minutes each to answer the three questions I asked, or pick one of them and answer. Please, we can start with Jana.
Okay, no problem. So if you're fine with it, I would like to address the last one. So first of all, to answer the question directly, it was not my idea, but here I agree with Team Ash, who actually shared it during the last meeting I attended. So the easiest way to ensure that Russia will not export oil to countries like India or Turkey, or the other way around, to make sure that those countries will not purchase Russian oil, is to establish sanctions for any refinery that would use Russian oil. To put the question like this, so you either trade with Russia or you trade with the European Union. And very straightforward, if we frame problem, not we, but the European Union authorities, if they frame problem in this manner, then probably no one would risk to purchase oil from Russia. But this is like a part of a broader problem, because when I did another research like a year ago or something, Russia actually uses its like friendly countries, sometimes even satellites in the Eastern Europe, somehow to go over the sanctions, and this is indeed a big problem. So for instance, when it comes to dual-use goods, other essential goods, I mean essential for war, like energy, materials, and so on. So probably this sanctions policy needs to be reconsidered, and we need to account for the fact that Russia has many potential partners in order to do this successfully.
And it goes with the question of unanimity. If someone wants to answer the question about how to circumvent the rule of unanimity.
I'll just, yeah, I'll be brief. I'm not an expert on EU law, but I understand from our discussions with our European partners that mechanisms to pass this through a qualified majority vote are being discussed. So that's as much as I can say at this moment.
Any other questions that was
Yes,
asked?
I will also the final answer not the final question, but the one from the anonymous, that's in the about the mechanism which could make it possible for the EU nations to carry the risk collectively, national guarantees without jeopardizing the assets. So first of all, our understanding, not only Ukrainian but from the international law as well, that there are no legal risks. Basically, we just don't see any forum where Russia could sue Belgium or any other state. But even in that respect, so what we do understand and what we respect are the concerns of Belgium's overall for the political risks. And this is where it is really important that the states that have immobilized the assets, not only the European states, but also the G7 countries. So a significant portion of the assets has been immobilized in Canada, in Japan, in US, in Great Britain, in Australia. So it is, first of all, it is very important to ensure the double locking, which is a separate, which we don't have time to discuss. right now. But in any case, from the political point of view, it's important that the international community of states act together on this and are not leaving anyone behind. So we are fully here with supporting our dear friends from Belgium in their request for the sharing of political risks.
Maybe to complete this question about the legal issues, there are also private assets that are frozen in Europe, and they are much less. Of course, it's something like 24, 25 billions. But I've heard that lots of Russian oligarchs have hired legal experts and lawyers to defend their assets in Europe. And what in this case, very briefly, if you can.
Very briefly, the assets of private Russian individuals are significantly harder to go after for the basic legal principle that a Russian national legally does not bear responsibility for the actions of the Russian state unless there is conclusive evidence that this particular individual or his entities are complicit in the Russian aggression against Ukraine. Like, for example, Rosatom. Rosatom, although it's a state corporation, there is a very extensive evidence, and please see the latest report by a Ukrainian NGO called True Towns, where they analyze how Rosatom is participating in the tortures of Ukrainian nuclear physicists and employees of the Zaporizhzhia nuclear power plant. So this is an example where a corporation could go for, but overall, the Russian state assets are the primary source for the Russian state responsibility. And that's also very briefly, last point from me. For Ukraine, it is of critical importance that at least a portion of the reparation loan is set aside for the international compensation mechanism, which is set up within the implementation of the UNGA resolution. So of course, the defense needs are of utmost priority, but our suggestion to our partners is that we could set aside a portion of the assets made available through this reparation loan, reinvest them not under 1% annual interest as of now, but as using the Norwegian Wealth Fund, 7 or 8% annual interest, and then use the proceeds from that to fund compensations. The compensations can be given not only to the people of Ukraine, but also to foreigners who have suffered on Ukrainian territory as a result of Russian aggression, and to the state of Ukraine, which would allow a long-term defense and long-term reconstruction. Thank you.
Thank you. And Paula, to conclude.
Yeah, I have literally 1 minute. So a couple of things. To me, what is very important is to understand correctly and estimate the funding gap for Ukraine, because that is the only way we can mobilize enough resources to address the things. And at the moment, we are talking about resources that are not even enough to address that gap. And there is no time to discuss Mykola's point, but the other important point is not to put Ukraine into a difficult position by promising too much, ending up with yields that are too much, and in order to raise this money. So it should be something that is feasible, is correctly estimated, and will give enough space to Ukraine to carry on through the short term, but also looking at the long term.
So thank you very much to our speakers for these extremely interesting presentations that I hope helped us to better understand what is at stake and what will be discussed tomorrow and day after tomorrow during the European Council. Thank you for all the participants for your time and for your questions. And good luck to all of you, and good luck to Ukraine. And thank you very much. Bye-bye. Slava Ukraini.
Heroям слава. Thank you. Thank you. Merci à tous. Merci.
À bientôt. Au revoir.
Au revoir.
À bientôt.